There's plenty of headline news this week. That's our topic for today's Backstage Pass. Now, this week is packed full of all kinds of news, from economic news to housing news. There's a lot of stuff that's coming out this week, and as this news comes out, we're going to bring it to you and let you know how it's affecting the markets and hopefully what to expect. But I always want to remind everybody to remember that a lot of times when news does come out, there can be a tendency to focus on the negative in the news, and I want to just remind you to stay positive and focus on the positive. Dig into some of these news and this data that comes out. Let's really try to pull out the information that's in there and focus on what we can control and stay positive. So that said, number one, the Fed. The Fed is meeting this week for their July FOMC meeting, and they're fully expected to raise the Fed fund rate by 75 basis points in a continued effort to fight inflation. That should be good for the bond market. The bonds should react favorably to that. Number two, quarter two GDP is set to come out, and it's set to come out at negative 1.7%. That's the expectation. Now, we won't get a final reading. This is just a preliminary reading. We won't get that final reading until September, but that would make two subsequent quarters with negative GDP, and we'll see how the markets react to that as well. We expect the stock market to probably react adversely, bond market to, we'll just see what happens in the bond market. Number three, PCE data, that's personal consumption expenditures. This is the Fed's favorite measure of inflation. The last reading we have on PCE data is from May. It came in at 6.3% on the headline figure. The core figure was at 4.7%. We're expecting a spike this month for the PCE data for the month of June. We're expecting that to come in at 6.7 or 6.8%, similar, kind of mirroring what the CPI data showed. Now, the bond market could react negatively to that hotter inflation data on the PCE, but the bond market has already reacted to the hotter CPI data, so that reaction may be a little bit muted. We'll just have to wait and see how the bond market just kind of assimilates that data. And lastly, in housing news, we're going to get appreciation readings from Case Shiller and FHFA, plus we're going to get new home sales and pending home sales reports. All of that coming out this week, so it's going to be a busy week. Now, for the bond market for today, and what are mortgage rates doing today? Well, bond market opened up, mortgage bonds opened up at about 20 basis points lower than where they closed on Friday. That means that mortgage rates opened up a little bit worse than where they closed on Friday, but mortgage bonds have been able to retrace some of their losses. They're staying above the 50-day moving average, which is good news. We want them to stay above. We want mortgage bonds to stay above that average. And we could see, if mortgage bonds continue to retrace their steps, we could see some repricing for the better throughout the day. The 10-year yield is up about 3 basis points, and it's stayed pretty steady throughout the day. Now, that's all the news that we have for today. Remember, like I said, focus on the positive, stay positive, control what you can control. Have a great week, and we will see you tomorrow.